bicycle, bicycle. I want to ride my... All right, Philip Morris International Inc. PM. That is in consumer non-cyclicals, industry tobacco. New York Stock Exchange got an alert for that today, and boy, did I resonate with what I saw, guys. Check it out. Monthly defined. A little hindsight. Monthly defined. Breakdown. Monthly defined breakout. Until we have a close above 120, we're not going to envision any bullish scenario right now. Until the 12-month average starts flattening and going upwards, and you have this type of a sideways move breakout. We're not going to even touch that right now. Stage 4 disasters is what we're looking at. And check it out. All the cool stuff. All right, and here is pretty much where I have all my monthly defined support levels. So right here we had a top defining that support, monthly defined support. Okay, we're still in the 12-month moving average going upwards. So we get a chance to go back in. The first time you violate, it's less damage. But after that, once you start violating it for a second time, and then if you stay below the 12-month moving average for any prolonged amount of time, you see how these candles, the wicks, doesn't have long wicks on top. Sellers not coming in that much, but right here, sellers deciding when it's hitting the 12-month average, buyers coming in, and then after that, the longer you stay in, it's a trap. It's like you're in the, if you're playing defense, eventually you'll get scored on. Eventually you have to go on the offense. You have to be in the other person's and the other team's defensive zone. You want to be close to their goalie to take some shots. Well, here, if you're always looking at a stage 2 breakout or an uptrend continuation and you have price action below, you're on the defensive. You're one step closer to breaking down than continuing that breakout, continuing that uptrend. And as soon as it starts flipping over 12-month average, that is the weight of evidence that you have to start looking for important breakpoints, important monthly defined support. Embryonic breakdown. Maybe you're not going to play it right away. Total weight of evidence. We'd have to go on the weekly, see if you're above Ichimoku Cloud defined support, see how the sector's doing, the market, the index it's in. But this is embryonic. After that, breaks down, going to test some previous support, broke down through that. Now that support has become resistance. Now it goes down, tries to test this monthly defined support right here. It doesn't go through, bounces back up. Now hits that support, turn resistance, hits that 12-month average. This would have been a great time to short. Right around this area here. Refused, price action started going back down. Great risk reward, 12-month average protecting you. This is what I call a wall. Previous support and resistance protecting your sell stop. So if you had a sell stop just above here and you entered here, yeah, pretty good to go, guys. And what happened after that? Well, let's go back down. Let's test that support that it failed before. It went right through it. December's not over yet, so it could actually, this could be a wick, could close above. But now you're defining, you're hitting that more important, that crazy long term, since 2012, monthly defined support. And that pattern, that implied measure move, that greedy implied measure move is going to bring me all the way down to 2009 lows, guys. Wow. That's the greedy target. You can make a case that this is the pattern, this top pattern here that broke down with a pullback, but target's still valid, and then it brings you here. So the closer the target, the more probable it is of being reached. The further away this consolidation pattern, its implied measure move is more chance of being reached than that one and then that one. But it's good to know to identify these levels and where to expect monthly defined support that might make you bounce on the weekly. So that's where we're going. Weekly. Okay. What do we have here? What do we have? Look at this mess. below the Ichimoku cloud. So that's done. It's been done for a while. Even right here, we're in danger zone. So back in March of 2018, March 2018 is really when we had the weight of evidence. It was 30-moving average C was already starting to go downwards back in October 2017, but we still had Ichimoku cloud defined support. See how it brought it back up, and then you were starting to define that monthly defined support, this line right here. So all that back in. So you don't want to waste time. Let it marinate. Let it chew. And right here could have been pretty good entry, guys. And look at how crazy red candle is for that one here. Right here, this would have been pretty good. This closed right here on this candle. That week of March 12th. Hit that 30-week average, going downwards, closed below the Ichimoku cloud. Could even waited a little bit more, I guess, if you really want to have that monthly close. And this candle here, I think it does it. And then you have that crazy candle right here with crazy red volume. That is big warning sign. And if it fell too much, you're far away from that moving average. The chart needs time to accept that. Let those buyers come in, and then those sellers are not there anymore. Sideways move. Let the 30-moving average catch up to you, and then you're in a good place for a continuation short, guys. But what actually happened is it actually closed above 30-week average. It wasn't inclining yet. It was starting to incline here. You never had that volume breakout right here on that candle. You need twice the average volume of the previous 4 weeks. Not there. You weren't overperforming the SPX. You had a lot of Ichimoku cloud defined resistance on top. You were hitting that previous monthly defined support and outturn resistance. You can't go right through it. So the weight of evidence, for sure, we wouldn't have been buying this. This is considered as a strong pullback through that 30-week average, but definitely not a buy, not a stage 2 continuation. You didn't have the total weight of evidence in your favor. But right now, you keep an eye on that, and when it starts going back down, and it starts right like here, red, underperforming the SPX, declining 30-week moving average. So right here, that's your clue to get back in, close to 30-week moving average. Man, this is pretty good. Right here, close to 30-week moving average. If it closes especially below, let's see how much volume you get by the end of the week. But if it closes below that monthly defined support, those two levels here, you're still pretty close to that 30-week average. So an entry here, if a sell stop above 30-week average, above, maybe this one's kind of far, but you could even tempt it here. Any pullbacks once you're below here should hit that monthly defined support and resistance. And if it goes through that, you have another one closer by here. And after that, that should continue down. So you could actually get in here, put your sell stop here for half position, wait for the price action to go down, hit that monthly defined support here. If it bounces back up, then after that, when it starts rolling over and the Mansfield Auto Strength stops gaining on the SPX and starts its decline, starts over its decline, underperforming the SPX, right here, it could have been pretty sweet, guys. So that's how I scribble, man. And by magic, these scribbles come alive. But it's not the scribbles, it's just correctly identifying or support. And especially, usually you don't see it on the weekly, see it's far away. Pat, I don't understand why it's bouncing. Well, if you go on the monthly, you remove a lot of noise. You condense all these candles into bigger candles. And you're able to see the bigger picture. So expect those bounces of this monthly defined support. Sometimes it sinks through, it comes back up. But you really got to respect that, those monthly defined breakout lines, breakdown lines, and use them to better calculate, better time your move for entry, guys. So stage 4, really continuing, and that's almost considered a stage 4 continuation breakdown right there. And you have those crazy measured moves on the monthly, guys. Philip Morris, man, you're going up in smoke. All right, guys, and subscribe if you like this. Thanks for watching. Ciao, guys.